Welcome to friends and traders. Let's have a quick discussion on bigger time frame trends. So for folks who are in the program, they have seen that a few months back how the market is going to blow the top and why. Today we are going to give you some ideas you can work on. Remember, we have to thank you for your partnership, for seeing the videos and add some value to you guys. So because not everybody is ready to go to the next level, and this is a journey, and the chosen one can make progress when the time is right. All right, so here it is. So we are just going to use the free stuff here. The software is going to be tradingview.com. All right, so one thing we have to talk about is it's all about various layers of vibrations floating in different dimensions. So we look at the vortex. Now this is actual simulation of the vortex energy which is creating all the crystals, and we are nothing more than crystals, and there's a lot more going on. This is the Fibonacci vortex integration. It is the cosmic clock you can look at if you are interested in, and this is going to change the numbers and the hot numbers for that given hour. And if you know what to do with the frequency numbers as they go up in higher dimensions, and you can see how big they become. And this is telling us the activation at this hour, the active numbers. We have to teach you how to use them, but you can see if you can investigate something on your own. This one has a little bit of interpretation to this, where we are saying which month, what day, what bias can be had. So today was 30th. If you had to take a trade, we have to align the frequencies once they are bullish, and this is how it goes. All right, it happened at the end, but if you're looking for the trade for that day, this is the impulse. You're just taking longs only, right? I'm not holding any frequencies here and any tools here, but you got the idea, right? All right. So this might give you some. Now what we are doing here, we're looking at the vortex mathematics and see which of the sequencing is active. Now this is just very basic stuff. It goes very deep. We can build floating devices. All right, vortex is something unreal. This is, I think, again, if you understand the price and you put some numbers here, right, and you can calculate your values. It will tell you something: support, resistance, and the windows of change. Again, you need to be explained what this is all about and what is the hard number at this moment of this price. So we're converting price into vortex mathematics, and as a plot, it tells you where you are in this vortex. Again, without explanation, you can do your own research. All right, you can always play with these. This one works nicely if you know what you're doing, if you know what cells you need to use based on the squaring mechanism. If you don't know what squares might exist, you can go to Astro Analysis here, and you can come with this Explorer and you can just go and use any of the numerical values. You can give the name of IPO date of the stock, full name, and the IPO date, and then the logic is going to print. There are 33 frequencies. We just gave you 4, and once you have those frequencies, you can come back here and play with the Gann square. Other ones, I think I don't want to talk about it right now, right? So you got the idea. All right. There are some informational things you should be aware of. Coordinate systems, celestial planes, right? There are various kinds of planes. You see this one here? So we're talking about celestial, equator, elliptical, galactic, horizon. All right, so these planes, when the planets are projected on these planes and we rotate them, at the boundary conditions, you will see some impact. So you can understand the basics of space-time migrations of things. All right. Simple cycles. Understanding the synodic cycles is important in Gann's work. You can check this out. All right. Again, we're gonna build more things for you guys, and really appreciate your understanding. You can always come back to videos, and you can go to Mastery, which is gonna take us to the video blog, which you're looking at the video right now. The hottest sorted stuff is right here. Everything's hot. Level 0 coaching of interest. If you want to get into level 0 coaching, you can see what is at your disposal. Level 1 gets into a lot more models. We are applying the same day for all the models. Well, remember, 1 minute is same as $1 is same as 1 degrees of planetary movement, right? That's the relationships. So there are conversion factors you should understand. Market works in whole numbers for price and in fractions for time. We mentioned so many times. What that means? Well, you can come inside and discover the depths of what that really means. But the point is, we can apply synthetic things at different times to make different cases. Here, we have taken a single day, volatile day, and applied all the tools on it. So we have one constant, which is the same day, and how we can apply all the tools and how profound they could be for your personal success, right? That's all there is. All right, my friends. And then I think L2 coaching is same thing. There's a lot more going on, lots of tools. These are just getting started, get some insights into it. All right, so this is where I think you want to spend some time getting the knowledge of now magical squares. This is where the magic unfolds. These are the switching circuits, polarity circuits, and the pairs, the triplets, how they work together. If you want to get in a little bit much more deeper science, head over to planetary squares. This is where the free energy is going to be seduced from. The moon controls 369, sun controls 666, and the story goes. This is close to galactic constant, very important number. Now you know why we use 34 moving averages, 15 moving average, right? 65 moving averages. Why are these 1, 1, 1, 2, 2, 2, 3, 3, 3 angelic numbers, right? They all come down and converge into a sequence of numbers which have some deep meaning. And then how we can apply this to the market is what we are after. You can study this Gann's methods, how he was doing things. You can put some numbers here and you can calculate some values. It will help you if you are into big swings. So you can fed over and understand the gold prices, what GAN was doing. This is coming from the historical perspective. What kind of cycles exist in gold? All right, GAN's methods, 30 years. Now I may have to look closely at this, what coders have put together based on what I explained them what to do. Coffee, same thing, right? If you're into coffee. So spend some time, hopefully, if you have time, understanding the secrets of this GANs, oil trading, silver trading. What is this one? Yeah, these are just to fix cardinal points, angles, this, that, right? Typical things. All right, no problems. So, but there is this method to his madness. If you understand these pages, understand the frequencies, understand how he was using the hotspots, how he was finding the hotspots which are offset to the real highs and lows. He was never using highs and lows. That's why you cannot get to what he was doing, right? So this will help you understand. All right, just give you some right pathway. This is good one. You can put some cycles, prices, and you can get, if you know what cycles to use, you can use highs and lows, and you can get the vibrations. I'm not going to go after all this, right? Not in one day and not right now. I'm just giving you the ideas what we can do. You can just do the time axis, price axis, peaks and valleys, but you should know which cycles to activate, what price, what time, right? If you just use typical highs and lows and the price, you may not get as good. But if you know the secret points at a given moment in time, the secret price points, which are harmonic price points, they are not going to, which we have watched my video recently, which talks about you expecting it to be at a certain level with the price, but we are behind the scenes pinning things to where the harmonics are, where the natural harmonics of the price are, right? That changes the entire dynamics. Again, you have something, right? Just to go through the mathematics support is here for you. Go through this and see what comes out of it, right? Soybeans, if you're into soybeans, right? Boom. Check it out. So there's some basic foundational information which is hidden in GAN's work. That is all there is, because that is in public domain, right? So we have it in public domain. And we also say which cycles are active. For example, oil cycles with 90-95% accuracy are operating on this 10-60 year cycle. See that? So just think through this, go deeply into this, understand it. Take your time. It's free, my friends. It's free. Why? Because you are committing to this video watching, so we are just committing back to you to give you some value here, right? All right, so let's get back to business now. Why are we here today, my friends? Well, we are here gathered together once again for something different. Today we're gonna make an idea of let's say we have ES futures. Let's go to bigger charts actually, right? Let's go to bigger chart. What is a bigger chart? A bigger chart is a chart which is at least monthly or 369 of monthly. Let's check it out what we are saying, right? Okay, this is it. So if I ask you, where is the trend right now? You should at least go to the monthly chart. And this is where we were saying the close on the monthly happened here on this time frame. This was April, this is May. And if you watch this closely on a monthly basis, if you have a strong close, now this is nothing more than a 10 period moving average. That's all you have to do. Typically we do 10 period moving average on monthly, right? Right here you can see simple or EMA 10 period. When you close strongly on a monthly basis above this, you're going long. Right here, boom, you're going long, right? It'll last you for years. Same thing, you're going long for years. See that? Years means it will be 18 months. Now we have a strong close and going down. Strong close, we went down 20%. If nothing else, my friends, you can just get this going to see. Now I'm saying this is the base, which means we can go to 3 months, 6 months, and to the extreme we can go 12 months chart. There it is. Now this this is so much fun to see this chart, that all the panics 2008, right, the COVID panic, everything is all there, it's all contained. This is where the pension funds never go crazy for years. They're holding for years. Where is the bullish? Well, it is bullish. Where is the bearishness? There's no bearishness at all. See that? So 12 months chart means this one single bar is 12 months long. 1 year. Going back since the beginning of time. So let's see if we can get Dow Jones. I don't know if we can. DJX. I need the index. Let's see if I can understand what am I doing here. Stocks, indexes, Dow Jones Trade Index. I don't think they have too much data here. Maybe you can try. I don't know what else to tell you here. Let's try something, some stocks. Oracle has been out there for years. Now look at this. If you bought Oracle, right here, see that? 20 years, 10x returns. So people want 20 trades a day, they miss the bigger picture. Next time, let's get Tesla. There's not much data here, but we'll see. Now here's a very interesting fact. The close of Tesla never happened after all the splits and everything else. They never closed on a yearly basis below this line. So what we can do when it comes close to the line, you buy, and buy. Now you are the most profound buyer of equities and the direction. Now the tactical part is, can you make some trades which can be put in place with 8x return on investment? Risk 1,000 to make 8,000 and you have 1 year to make it. Risk 10,000 to make 80,000. Do 10 of these. In 4 years you're making $2 million a year. You can start with 10,000 risk. Worst case, if you're such a nasty, in a nasty downturn that in this market went down 2 years, right? That's the only thing which might cause this collapse of 10,000 capital in 1 year. And let's say with the bias of 50-50, you win 50, you lose 50, you lost 5,000, you made 40,000, right? So you can just think about it. So we have the capacity to control the risk profiling, how we trade the positional trading. If you put the trades in the correct location, with the correct bias, with the correct hedge, $10,000 after end of 4 years, in the 5th year you'll be making $2 million a year with 50-50 probability of success. That means you're going to blow 50% of it and 50% is going to win. And every year you take 1,000 position, next time you're taking 2,000 position, then you're taking 5,000 positions, next time you're doing 10, then you're gonna not go above 50,000 positions per trade. We discuss all this in risk management and hedging techniques in finer modules after you graduate from level 1, 2 and 3, but you got the idea what's going on here. Okay, Microsoft. Where was the buy? Look at that. Look at that. 10, 20x. You didn't have the patience. This is how it goes. So was there a buy? Look at this. On a yearly basis, it came down to retest this big bar. It never told you to go short. This is how you get millions and millions, right? Alright. What else is going on? What is the popular thing right nowadays? Nvidia, same thing, right? So you can always go down to the next step down. This is, let's do 3 months chart. There we go. I think we were doing something here. April was a buy. We bought right here. We bought it. All right, let's do AMD. Always start with 12 months. Now AMD gave you this punch down. You see this? It went from 240, punched down to the buy, which we also bought. We took all these 100-point moves up. So can you. Not to wait. Since you lost that boat, you want to wait, right? So this is the buy. So when you are going on a yearly basis, come close to the line, buy. Close to the line, buy. Buy, 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 buy. Keep buying. Come, now it is here. Comes here, buy. If not, it'll come up with you. So these are the buying opportunities. Now they are flat opportunities. What can we do about it, right? Alright, that's how it is. Now if it is flat opportunities, we go down to, let's just discuss that as well. So let's go 1 month. So this is 1 month chart. Strong close, shorts only, strong longs only, right? Shorts here, long here, short, oops, reverse it, no worries. No close above below this line since all this time. Alright, so what else is going on here? 3 months chart. AMD has been a little volatile and sideways for a while, but you got the idea. Alright, let's see what else is going on. Meta. Was Meta a buy? Right here. April, everything was a buy. This was the ultimate buy location. Look at this. Boom. So, buy started here. Says short, then you have to reverse it. It took a small loss, and there we go. Same thing, one more storm loss, right? Here it worked out. There we go. Now if you're hedging at these levels, not getting hurt. And then remember, you have to hold for 6 months minimum. 1 year, we put on 1 year positions. Alright, tactical moves there, and then we can reverse it anytime we want. So position has to be put in place. Remember, market is always drifting up because of the interest free rate equations of the price valuations. Alright, let's go to monthly again. 12 months. Now maybe SPX. Where are we, SPX? Look at that. So if we had the index fund here last 15 years, now you can see this was happening right in front of you. Alright, I think I should better shut up, not talk anymore, because you guys are now the experts. How about crude oil? Well, let's look at the USO. No problem. That doesn't look exciting. Crude crude oil. Now crude oil 1 month, 1 year, because this is mostly commodities, will not probably have this. They have cyclic nature. Probably we can just go down to, like, say, start with 1 month. What's going on? This was the ultimate high, 2022, and then we have a burst. I think we got this. I was so pissed off that I did not get the zero. I got it here somewhere. We double, tripled the money, and then obviously it was just like a play, once a lifetime play. The futures went negative. Think about that. Futures went negative. It was the most profound experience. Who knew? All right, there it is. Unless we can see if does it have any value for 3 months. You got the idea, right? Okay. Wicks. So there are various kinds of wicks. Now we had a discussion with our NASA scientists today about the wicks. Wicks, you can put some bands around the wicks, right? Volatility bands. You can put Keltner channels. I don't know if they'll let me do it or not. Let me check. Okay, that should be enough, right? These are the volatility bands, and we're doing it on volatility. All right. When we have a huge spike like this, these are the multi-year spikes, right? This VIX has already spiked for this year. So what are people saying? People are saying a couple of things that, hey, this could, if you see this, when you get close to these levels, so you just put the vertical lines, these lines. Now this is a 3 month chart. These are bottoms. When you go above and touch these lines, you are hitting an upcoming bottom. Understand that. All right. Yeah, you can have some frequencies. You can have some time frequencies, but ultimately, if you have V-vol is something different, right? Don't worry about it. But ultimately, think about it. When volatility is compressed such a low fashion, what happens? The market will lose its power to move. It can drift and drift and drift. Eventually, it'll reach a point because of the options market tied up with this volatility models. They have to release the volatility. Why they have to release the volatility at the lower level and expand the volatility? Because then the market can also expand its movement, get a pullback and blow off. Next legs are created by expanding the volatility. Remember that. The challenge with volatility, it can stay there for months. This is a 3 month chart. It can be staying here for 1 year. You cannot predict it's going to blow because volatility quant models are mean reverting. But remember, if this is the mean, center of the band is a mean, it's going to revert. We don't know when. We can do some predictions, right? And you can do forecasting of volatility, and if you want to use non-linear equations, you can use artificial intelligence models. They can model non-linearity much better because they can have, for example, CNN models can be used for spatial features in multiple dimensions. That's why we use that for detecting audio, videos, pictures. If you have a multi-dimensional space, right? The spatial features can be extracted very nicely through CNN models, or you can do other kind of short-term, long-term memory models. But if you want to just go exclusively on quantitative methods of volatility modeling, it's quite complicated to forecast when it's going to revert to the mean and how it's going to blow. And if you can predict precisely the market is going to blow on this day, market is going to go down. But you can see it took 1 year. Look at this. Yeah, you can you can count these things, count this phenomena. You can convert this into a cycles. You can forecast the cycles. You can feed this into AI models. You can do all these things. The easiest way and the best way to use volatility is, as we have been discussing, buying the pullbacks. This is a good time to buy, and buy on one of these once in 2 times, 3 times in 10 years, you will have these blowouts, perfect buying opportunities, and then you will have other small buying opportunities, smaller pullbacks, 20%, 18% pullbacks, and then you have a smaller pullbacks. So now we're expecting this volatility to expand. Remember, I just showed you that, right? What is going to happen? If you're asking me, where is the market? On a 3 months basis, is it going to pull back? What is telling you is you should be bearish. Okay, that's too big for you. Let's go to 1 month. What is telling us? Unless it closes below this line, there's no bearish momentum. Gets pulled back to this level is a buy. Based on what is this telling us? Think logically. This is 10 months moving average. Is almost telling us the 50 weeks high. Think about that. 50 weeks high is done differently. There are a lot of models in the banking industry and the professional industry which deals with blowout of the top, because that means there's a lot of pressure blowing the top. And blowing the top, boom, goes. Blowing the top, it goes. The next question is, where is it going, my friends? Where is it going? We talked about it in the last video. The poor man approach to where it is going, you can do ABC forecast using Fibonacci extensions. Do we have Fibonacci extensions? A, B, and C. Now if you do the Heisenberg double slit experiments, it should be going right here based on that 70 to 100. Now you're expecting volatility to crash. There has to be some reason to crash. It could be war can start, anything can happen anytime. That's the game. But if you're a long-term trader, positional trader, you don't have anything to go short the market at this moment in time, unless you have a close. Then you may experience few months of close. Eventually it'll rally back up, just like it happened here. It happened here, small. Now if you see this, one thing happened 1 month and then reversed. Same thing happened 1 month, it closed below this 1 month, it happened and it closed above, right? See that? It is not, it is drifting on the bullish side, not in this never drift on the bearish side. Drift is always on the bullish side. That's why they say long-term buy and hold. Now why it stopped here? Well, we teach you why it will stop here. That's a different story. So I hope this helped. Looking at the bigger picture. Weekly chart. Alright, so this is how I think one approach to trend. Where is the market? Put the wicks together. Put the monthly cycles together. This year low may have been put in place already, actually, right? Now if you want to buy now, you are in panic. Why? Where are you gonna buy? Are you gonna buy here or are you gonna short here? Yearly chart will tell you there's nothing to short. 1 month chart. Now comes the tactical trading part of it. What is cheap at this moment? Options are cheaper, so you can hedge and take a bias. If you want to go long and continue to go long next 3 years, you can with the hedge, which is much cheaper. And you can position your hedge portfolio. As I said, you can do risk 1 to make 8, risk 1 to make 5. You control that. Risk 1 to make 10. You control that. If you don't have a portfolio margin, you have to have a little bit of capital outlay, right? To make those kind of trades, you need capital. All right. And if you don't have the capital, you want to do something much cheaper, that is also possible. It won't give you the same juice as you will get with combination of stocks and options. 3 strike combinations we do to put these trades on, and we just walk away. See you next year. All right, my friends, thank you so much for listening, and definitely go and spend some time on advanced GAN stuff one by one. Study the cycles, study what's going on, and who knows, you may find something you've been looking for. You may find the answers you've been seeking. You may get some insights. We also put some probability of historical success numbers as well. There's a lot of things happening right here, and every market is different. So we have given quite a bit of information just to get you started. Thank you so much. I appreciate it.